The SEC just made a move that could either kill tokenized stocks before they even start, or accidentally create the biggest opportunity for crypto investors in 2025. While everyone's distracted by Bitcoin price predictions, regulators just proposed changes to something called Regulation NMS. And if you've never heard of it, you're not alone. But here's why you need to pay attention right now. Regulation NMS controls how stocks trade in America. It's been around since 2005, and it basically makes sure when you buy a stock, you get the best price available across all exchanges. Simple enough, right? But now the SEC wants to update these rules. And buried in those updates is language that could completely change how tokenized stocks work. We're talking about stocks that live on a blockchain instead of traditional exchanges. Think about it like this. Right now, if you want to buy Apple stock, it trades on NASDAQ during market hours. You can't buy it at 3 in the morning. You can't own a fraction of one share easily. And you definitely can't transfer it instantly to someone in another country. Tokenized stocks would change all of that. They'd be available 24/7, tradable in tiny fractions, transferable across borders in seconds. It's basically taking everything crypto does well and applying it to the stock market. Companies like SpaceX are already exploring going public through alternative methods. Major banks are testing tokenized assets behind the scenes. This isn't some distant future thing. It's happening now. So why is the SEC stepping in? They're worried about market fragmentation. That's a fancy way of saying they don't want stocks trading in so many different places that nobody can tell what the real price should be. Here's the problem, though. The proposed rules were written for traditional exchanges. They assume stocks trade in one currency during set hours through regulated brokers. Tokenized stocks break all those assumptions. If these rules pass as written, tokenized stock platforms might have to follow the same regulations as the New York Stock Exchange. That means massive compliance costs, complex reporting requirements. Basically, it could price out smaller platforms before they even launch. But here's where it gets interesting. Remember ISO 20022? Those are the new banking standards that major financial institutions are adopting worldwide. Standards designed for real-time, cross-border transactions. Banks using ISO 20022 tokens like XRP, XLM, and XDC are building infrastructure for instant settlements. And guess what tokenized stocks need? Instant settlement infrastructure. This isn't a coincidence. The same technology that lets banks move money in seconds can let investors trade stocks in seconds. The SEC's rule changes are happening at the exact same time banks are upgrading their systems. What most people don't realize is that traditional stock trading is actually really slow. When you buy a stock today, it takes 2 full business days to actually settle. That's called T+2. For 2 days, nobody really owns that stock. It's just floating in the system. Tokenized stocks on ISO 20022 infrastructure could settle instantly. No 2-day wait. No risk of the trade failing. Just immediate ownership transfer. That's why major banks are so interested in this space. They see the writing on the wall. The current system is outdated, expensive, and slow. Blockchain-based systems are faster, cheaper, and more transparent. So what should you watch for? First, pay attention to the SEC's comment period. These rules aren't final yet. Industry groups and crypto companies will push back hard. The final version could look very different. Second, watch which companies are building tokenized stock platforms right now. Some are waiting for regulatory clarity. Others are building anyway and planning to adapt. The bold ones might end up with a huge first-mover advantage. Third, track ISO 20022 adoption. As more banks integrate these standards, the infrastructure for tokenized everything gets stronger. Stocks are just the beginning. We're talking bonds, real estate, commodities, all moving on-chain. This is educational content only, not financial advice. Always do your own research before investing. But understanding these regulatory shifts now puts you ahead of 99% of investors who won't pay attention until it's already happened. The convergence of traditional finance and crypto isn't coming. It's here. The SEC's rule proposal is just one more piece of evidence. Whether they're trying to enable it or control it, the result is the same. Tokenized assets are becoming real. Follow Stack Daily 60 for daily crypto and money tips.